You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group and co-hosts Uncle Mike TOSAW from St. Charles Wealth Management, Mark the Greasy Meatball Sebastian from OptionPit.com, Andrew the Rock Lobster GIOVINAZZI from OptionPit.com, and Henry the FLOWMASTER Schwartz from CBOE. The Option Block is brought to you by CBOE. When it comes to trading volatility, trust CBOE, the creator of the VIX Index, for in-depth and relevant information. CBOE's tools and services gives you up-to-date trade insights, analysis, and positions of VIX options and futures. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/VIX today to learn more. The views expressed herein are those of the speakers and do not necessarily reflect the views of CBOE Global Markets Incorporated or any of its subsidiaries, collectively CBOE. The information provided is for general education and information purposes only. There are important risks associated with transacting in any of the CBOE products or any of the digital assets discussed here. Before engaging in any transactions in those products or digital assets, it is important for market participants to carefully review the disclosures and disclaimers contained at www.cboe.com/US_disclaimers. These products and digital assets are complex and are suitable only for sophisticated market participants. These products involve the risk of loss, which can be substantial and, depending on the type of product, can exceed the amount of money deposited in establishing the position. Market participants should put at risk only funds they can afford to lose without affecting their lifestyle. And now, get ready to hit the Option Block.
All right, everybody. That music means we are back once again for a little bit of the old OB. Of course, your bi-weekly source for all things options related. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the ever exciting, at least we tend to think so around these parts, Options Insider Radio Network. If I sound a wee bit different, it's because I'm not coming to you from our Chicago studio, but actually right down the street here, overlooking the brand new CBOE floor. We've been talking about this for ages, the brand new CBOE trading floor. What a difference it is from the old one. Bright, sunny, cheerful, no one wearing a trading jacket. Very different from the old days, but it is fun. So if you hear some shouting in the background, something maybe something's going up over there in SPX or VIX while we're talking here. So it should be a fun time. Speaking of a fun time, if you do like what you hear, if you're having a fun time on the show, throw some stars our way. This show, anything else on the network, does help people continue to discover the content in these crazy, insane times we're all living through together. And then, of course, if you want even more fun in your lives, and who doesn't these days, then you know where to go. TheOptionsinsider.com/pro is the place to go to get access to all of that fun. Options Oddities coming up tomorrow. Pro Q&A, we just did it with the last emperor, Mr. Constantine from Fidelity, answering all your questions. Just did 100 last week with Mr. Matt from Oras. Check out all that goodness and a whole bunch more. TheOptionsinsider.com/pro is the place to go to learn more. And I am pleased to be joined today on the show Immediately to my left, yes, he is in person. I can verify. I have proof of life, listeners, by none other than the FLOWMASTER himself, Mr. Henry Schwartz from CBOE. Mr. FLOWMASTER, good to see you in person, sir.
Thank you, Mark. I'm always happy to join you. And it is really fun to kind of have you take a look at the new trading floor, which is, I think it's its birthday on June 6th. So it's almost a 1 year old, but it is still shiny and new. And,
it can almost walk.
to see the size of, a trading crowd. I mean, the SPX pit here is about 4 times the size that it was in the old floor. A lot of activity and, things are different, but they're kind of the same too.
Everything old is new again. Now, speaking of old, let's also go out to the hinterlands of Maine, where we are joined once again by the rockingest of lobsters, Mr. Andrew GIOVINAZZI from OptionPit.com. Mr. Rock Lobster, A, welcome back to the show. And B, have you come down here and seen the old trading floor, sir?
I visited the new CBOE building and the old post office, which I think while we were there was a dinosaur for 40 years, 30 years or something. And they jazzed it up. And then, I did visit the new CBOE floor. And this was the first time going back, and I've been going back to visit that floor since 97. So it's been a while now. Where, God, it's hard to believe it was 20 years ago I was on that floor. That's freaking me out a little bit. Anyway, wow, 25 years ago. Holy God, guacamole. That I didn't recognize anybody. This was the first year. I've gone back almost every year, and this was the first year I didn't recognize a trader on the floor. So either they all got old and retired, or they all moved upstairs, and there's just a bunch of young dudes down there now. There's a couple old guys, but there's aren't guys that I recognized. I'm sure there was a couple. I just didn't see them when I was there.
Now, looking down here, I was saying the same thing to Henry. I mean, there's a few, I would say, experienced fellows down there. But for the most part, yeah, you're right. I don't recognize anybody down. And it's so crazy now, Andrew, too, because they're all wearing just flannels and just regular, concert T-shirts and jeans. And there's no collared shirts. There's no trading jackets. There's none of that. I think we just got to wear jeans once a year on the CBOE. That was on Family Day. That was about it. Every other day, you had to have nice dress pants and so you could wear sneakers. That was about as crazy as it got. But these days, the dress code a little bit more lax. But hey, they're trying to attract a different crowd, right, Mr. Rock Lobster?
Yes, I mean, I guess so. I mean, it was funny. The only guy I recognized when I went there last, besides, all the people that I know is Kathy Clay, she was a market maker with me. She's now the CEO of all their data products and stuff, or their senior vice president of data products, and Ed Tilley, who's the CBOE chairman now, the CEO. So everybody my age is, kind of moved up the food chain. Of course, for me, except I'm just stuck in a compound in Maine somewhere. But
you love your compound on the shores of Maine, listeners. All right, and also joining us, we've got the uncleest of Mikes, Mr. Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to the show to you as well.
Always a pleasure to be here.
There you go. Succinct as always, as we keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block, the portion of the show where we break down what the heck is trading out there. And coming into the start of the show, we got another pretty much mixed bag on our hands. Listeners, again, it kind of depends where you're hanging out, old world economy or new, what kind of day you're having. If you're hanging out old school in the Dow, I joked before, why are you listening to us? We don't talk about the Dow. But I tease, of course. We love everybody here at the end of the day. And the Dow off 0.5%. So once again, the Dow just not feeling its oats out there. The S&P, though, usually in these types of days, the S&P is kind of barely unched, maybe slightly up. The S&P up about 0.2%. And then we've got our old buddy, the NASDAQ, nearly 2%, about 1.6%, though. So quite strong, all on the back of just this madness that is NVIDIA. We were just joking last week on the show, listeners. Who would deign to buy NVIDIA at a, whatever it was, 189 PE at the time? And lo and behold, we needed another, 50 odd handles to the upside in NVIDIA out there, because NVIDIA is apparently taking the market by storm. All you have to do is whisper AI. It's up 81 handles now, listeners. So that PE has gone into, I think the technical term is silly town. 201 is the PE out there in NVIDIA right now. But who cares about such things when we're talking about AI? Those magical two words, listeners, AI at the end of the day. So yeah, hopefully you had some NVIDIA calls in your back pocket because you were looking pretty good, at least as of this morning. What's looking actually a little bit better right now as well is our vol friends. Coming into the start of the show, we got VIX catching a bit of a bid. Remember, we were flirting with a 15 handle not too long ago out there in VIX land. And then today we're at about a 1905 when we kicked off the show. Puts us up about exactly 2 points from where we were on Monday's show. VVIX, so the vol of vol, once again getting frothy, getting a little bit juicy at 103 when we commenced operations here. And then we had VXX 3710, so getting about almost 2 points back, about 1.7 points back from Monday's show. UVXY 340, up about a third of a point. SVIX 19.3, down nearly a full point, about 0.8. UVIX 1020, up almost a full point, about 0.9. So those two moving pretty much in opposite directions, which is the goal at the end of the day. And then VolQ 19.3, up almost 2.5 points, about 2.4. Coming into the start of the show. All right, he's sitting next to me. I got to kick it off in the old CBOE hot seat today. Mr. FLOWMASTER, sir, a lot going on out there. What is catching your eye in this topsy-turvy market? And I hope you had a whole bunch of NVIDIA calls in your back pocket for today.
I did not have any NVIDIA calls. I kind of missed the boat on that. But I did do the math because it was very active into earnings, and the straddle went out around 7%. And I backed up a day before to see if maybe the straddle had richened up. And it did richen up a little bit from about 6.9 to 7.2% into earnings. But the thing that's kind of jumps out at me on NVIDIA specifically is there's about 17,000 of the 335 calls were net opened yesterday. Okay, so when the stock was basically $80 cheaper, in the $1.50 range, those are trading $52. So I did the math. It's $85 million in net value difference. I would not necessarily call that profit. I'm not saying that it was one trader, but I actually dug into it, and it looks to me like there was a roll-up of a decent-sized position from some lower strike calls. So I think somebody's actually been kind of riding this NVIDIA train for a while. It was funny because the press that I saw about it, it almost felt a little GameStop-y, right? Like we were kind of at ludicrous valuations and people didn't care. And then, I was talking to a guy this morning at a conference and he's like, well, it's all about AI. They have their chip is really optimized for AI. And obviously we bring up ChatGPT on every show pretty much. So, it's a heck of a wave and that's, somebody put some money to work and kick some butt. Which is impressive. But the funny thing is, if you look at the earnings history on that one, it did move 14% last time. So 7% was kind of on the cheap end.
I'm going to go out on a limb, Henry, and say that the Trade Alert trade of the day is going to involve NVIDIA in some way. Am I crazy, sir?
I think you are probably right, but it wasn't, since they didn't make money yesterday, it has to be a same-day trade, so we're going to have to see. And if we opened up this high and just kind of hung out, it might not actually be in the top. But there's other movers today.
That's true. We got to highlight a few. That's a fun newsletter. We should make that available to the masses. Is that available to the masses yet? Or is that only for subscribers?
It's not, but I've spec'd out a command in the system, which is going to be winner, and it'll rank it by P&L.
I think that would be a cool thing that our listeners would like to see at the very least. I know the Rock Lobster loves it. He loves himself a little bit at the old trade of the day. Speaking of the Rock Lobster, Mr. Rock Lobster, are you enjoying your trade of the day email? And then what are your thoughts on all this madness unfolding today? Did you buy yourself some NVIDIA upside?
Last minute, I did yesterday. I bought the May 26th strangle for $18. Or $19. It was ridiculously. I just thought it was way too cheap considering NVIDIA moved $20 this week, I think. So I thought that probably the risk for me, and I posted this in our newsletter, I made some good money yesterday, and I probably betted all the money I made on the net gain and this, just the premium on the straddle. So I don't do that very often, but and this is what I didn't get. Vol in there. I understand the stock was $300, but implied vol was actually really reasonable. It didn't even get a bid. And I think what happens too is, these stocks have these soul crushing rallies, right? So all the shorts and everybody that have been trying to be short, they they kind of, give up, throw in the towel, whatever. And I think you had some call riders come in, but it was enough to keep the vol relatively compressed. And so anyway, and I was like, yeah, and I like Henry. I started watching the straddle beginning of the week. One of my students, he was looking at it. He's like, "Can you tell me?" And it really wasn't even on my radar because I think the stock is great company, but I've seen every one of these high PE stocks come back to earth eventually. Maybe with the exception of Amazon, who still seems to defy all imagination, but I saw it at the beginning of the week, and I think the straddles are trading around $20. I'm like, oh my gosh, I can't believe you can buy that thing for $20. I think it was the 310 straddle was $20 on Monday or something like that. What was that when it was at the money? So anyway, I sold the calls this morning. I put in a stop, and it was fine, made some money. But now I'm looking at kind of upside call diagonals and stuff like that. I assume it will reignite as March again at some point. Probably it'll cool off here for a little while, but I could be totally wrong. But I am surprised at the lack of participation in this market from everything else. Unless you are an AI stock, I don't think the market really thinks you exist right now. I mean, you look at, the NASDAQ is up, 25, almost 30% this year. So recovering a good chunk of what it lost last year. Again, from a lofty level, but nothing else. Stocks aren't doing anything. Banks, oil companies, manufacture, all of it. Now you would think the AI would help all those companies become more efficient at some point. So I'm kind of like, whoa, okay, this is where all the money is going. We've seen this movie before, Henry, I'm sure, and you remember the .com boom, so I'm aghast, but I was kind of happy with the way it worked out. And now I'm like, okay, what other companies could have any kind of AI this or AI that, or when will some more mainstream companies, right? Because the biggest thing was every company needed an internet strategy in 1996, right? We got to get on the internet somehow, right? Because nobody had a website. Remember, there was all those businesses like, oh, we're going to be a website maker. A lot of those people did very well. And now it's like, okay, well, how many of these AI bots are going to be moving around? Now, I can totally see NVIDIA winning as they're kind of like the picks and shovels of AI. Like, okay, you're going to need high speed compute chips, and that's what they specialize in. AMD, again, I don't think they're as a powerhouse as NVIDIA is, but they're certainly there. Intel apparently just doesn't even know what a high speed compute chip is, apparently, because their stock's down $2 today or $3. So there's definitely a bifurcation here of winners and losers. So it's impressive, but it wouldn't be the first time we have seen companies just race out like this and people jump on because they kind of missed it. And who knows where it goes, but it'd be nice if the rest of the market would participate. Maybe we have some insights from Mr. TOSAW on that.
All right, Mr. Uncle Mike, sir, you have been invoked. First off, inquiring minds want to know, how much NVIDIA upside did you have in your back pocket? And then what else is catching your eye out there in this crazy market, sir?
I did not have any NVIDIA specific upside, but this is kind of an interesting story. And that a couple years ago, back in the day when we did not have interest rates, one of the alternatives that I would put my clients in would be a collar, in that I would buy a very highly volatile stock, buy an at-the-money put a couple of years out, and then I could sell an out-of-the-money covered call at the same time frame. And so it was a trade to where you're pretty much, there's no way you can lose on it because the put would protect you. The call financed the put because the call and the put were of similar price. You go a couple of years out. And it was just kind of like an alternative because we had no interest rates at the time. And what happened is not all but one of the stocks that I would do this in just went straight down. And so what I did about 8 or 9 months ago is I just bought, and these, I'm still in the same positions because they expire, and I can't say the stocks, but they're very highly volatile stocks that you could say are tied to AI in some way, shape, or form. I'll just leave it at that. But with that, for just maybe a few pennies, I bought back the covered calls. I'm like, well, I'm just going to sit on this for a while and just see where it goes because clients are diversified. And now what's happening with a lot of these stocks is that they're coming back. And so my original thought is that if some of these stocks, basket of these stocks would maybe move up, I would say 8 or 9% over a 2-year period, then clients would get roughly, I'm sorry, if those stocks would move up, about that much, then that's what the client would get over a 2-year period. And back before we had interest rates, when you're getting maybe 1% annually on your CDs, well, the client's fine with that. Okay, I'm good with an 8 or 9% return over a couple of years with no potential risk. I mean, I know I might not get that rate of return if the stock doesn't go up, but I don't have any risk. So everyone's happy with that. But now what's happening, and something that was supposed to be kind of just a boring thing that I'd check it 2 years later, I got to start looking at some of these stocks because now they're starting to come back to levels with which they were at a couple of years ago. And so something that was originally intended to be boring might become one of the most exciting things that I've ever done because of this AI stuff. And so I guess just a lesson in this is that when you have short options that you can buy back for a few pennies, it's typically wise to just buy them back. So that's my take on what's going on with me with this AI stuff today. I'm actually having to go to work on some leaps that I wasn't planning on dealing with for a while. So, and they're not quite there yet, but they're getting pretty darn close. In terms of where we're at right now in the marketplace and what I'm seeing and what's lighting up my tape, if you will, of course, we have AI. That's the big story today with NVIDIA doing what it's doing. But in terms of why some things are going up and some things are going down, NVIDIA is not afraid of the debt ceiling. It's just because AI is the thing now, the way Andrew described it. It's the .com of this era. And they don't care about the debt ceiling. But the problem is everybody else does. And so if the U.S. defaults on their debt, which it looks like they're not going to, it looks like both sides seem to agree that they're not going to default. But if they do, it's not going to be a good thing by any means. A lot of my U.S. treasuries, I have some garbage puts on that I just typically buy at the beginning of the year just in case. And I'm happy. I'm resting a lot easier at night knowing that a vast majority of my client treasury exposure is hedged with the garbage put that might not be so garbagey if we default on our debt. But that's the big news right now, and that's what's going to dominate the news until we get something resolved, hopefully any day now. But like we've seen this show before, we've talked about this before actually on this show. It's very likely there's going to be some type of 11th hour deal. And the Democrats are going to say that they won. The Republicans are going to say that they won. And then we move on. So that's kind of where we're at right now with everything. And that's what I'm seeing, Mark.
Thank you for that, Mr. Uncle Mike. Mr. Flowmaster, speaking of seeing things, we're in the same room. I can see you typing furiously. So something is catching your attention out there. So what is catching the eye of the Flowmaster here right now?
I was just going to add that I agree, Andrew. It's been a weird kind of, a handful of stocks are moving and then a lot of stuff isn't really doing anything. But a couple of kind of trends, the weight loss world, right, with Ozempic and that spilled into Pfizer beginning of the week, and there were a couple really heavy days and a couple big up days in there. Pfizer doesn't make it. I think it's made by Glaxo, but there was a news story about Pfizer coming out with their own version of these very powerful weight loss drugs, which also is kind of like makes us think back to the old guys like me, the Fen-Phen and some of these drugs from the 90s, I think, that kind of turned out to be bad. But we are seeing a lot of speculation, a lot of action in there. Pfizer's down today, and then the other thing is, remember we had this little banking crisis about 2 months ago. That's kind of quieted down, but those regional banks are still in kind of ugly shape, at least for stock prices. So, but I do think that the debt ceiling is still kind of what everybody, we just want it. I think everybody wants it solved. It makes everybody nervous, makes a lot of people kind of sitting on the sidelines. The last few, pundits I've seen on Bloomberg, basically are saying, they think that the upside is underappreciated once a deal is reached, which they'd be crazy not to reach a deal, but you never know what's going to happen in Washington. So, but I agree. You got to kind of look around to see where the interesting pockets are, because a lot of stocks are just kind of hanging out doing nothing. And implied vol and realized vol is really kind of near the lowest we've been, and it's just hanging out there.
Let's see what's cooking out here in the rest of the market outside of NVIDIA, listeners. Let's start in the indexes. And this seems like kind of one of those inverse days, listeners, where the single names are lighting it up and the indexes are kind of just playing a little bit of the old wait and see game out there. VIX, a good example of that, just a tick north of 250,000 contracts right now, 253 to be precise. The ADV is going the other way. It's going up to nearly 800K, 793,000 right now. So we're threatening 800K a day in VIX. Doesn't seem like we're going to get there today, but then again, the session is young. We all know volume can turn on a dime out there with the markets, so we'll keep an eye on that. SPY, on the other hand, though, not afraid to just take the bit in its teeth and go, closing in on nearly 5 million contracts right now, 4.9 million contracts. The ADV about 8.5, so SPY seems like it's on path once again to exceed that already lofty ADV number. The S right in front of us right now. We're watching it trade as we speak, listeners. 1.35 million. The ADV about 2 3/4 out there. I'm sure a lot of that is the old 0-day phenomenon, which isn't getting done here. It's going up electronically, but intriguing stuff nonetheless. I'm peeking over, Henry. You see any action in the SPX pit? As we're speaking right now, it looks like it's a little quiet.
It's quiet out there, but one thing is the 0-day makes up about 54% of the flow this morning, which is actually much heavier than normal. Usually we kind of see it in the 40 to 50 range. So, that really continues to be such a hot area. And I was talking to a trader in there yesterday, and who I've known for a lot of years, and he says, that the 0-day, they ignore it, but they can't quite ignore it 100%, but they don't really know what to make of it. Most of the SPX traders in there still think kind of the old-fashioned way, which is like, term structure of volatility and skewness and, kind of managing the risk that way.
They're the ones who are voting in our poll, which we'll get to the results a little bit later in the show, listeners. They're probably some of the ones coming down on the negative side. So the S right now, 1.35 million. As the FLOWMASTER said, heavily skewed towards the 0-day. Are you slinging a little 0-day SPX? Hit us up, let us know, or just vote in our poll like a lot of you are right now. Small caps feeling their oats today, 708,000. I was saying for a while, it seemed like that 1 million ADV in IWM was kind of unsustainable, and they're proving me wrong. They've actually bumped it up to 1.1 million right now. So they are taking the bit in their teeth out there as well. It seems like they're on track to hit that already lofty ADV today. And the Qs also saying, hold my bear, kid, 2.15 million contracts on the tape for the Qs. The ADV, not quite 3 million, but pretty darn close, 2.85 million. Let's go out to the single names. I'll let you take a guess, listeners, what is leading the single name list right now. Not much of a shocker. But what is maybe a little bit of a surprise is just how much paper is going on. Like I said, it is a very single name heavy day, and you can go through this list and just pick out all the AI names, and you're going to get about half of them here today, including number 10. Cost you 292,000 contracts to break into the top 10 today, listeners. That gets us to Taiwan. When's the last time we talked about Taiwan Semiconductor on the show? Just need to sprinkle the little AI pixie dust on it, listeners, and all of a sudden it's up 10 handles exactly, a little over 11%. Trading pretty much about $100, almost even right now. And again, good for 292,000. They've had a nice rebound as well. Their 52-week low was about $59.50. Looks like that came back in the November time frame. So they pretty much doubled or almost since November of last year as well. A lot of that coming just in this last leg up here. Getting just everyone getting the afterglow of all the fun that is NVIDIA. Including, let's see, number 9 here, Meta. You don't really hear people bandying about Meta that often in the AI conversation. Nonetheless, they have some irons in that fire. Good for 302,000 contracts today, and they're up 5 3/4 or 2.3%. So trading a little bit shy at 255 right now. Again, our friend who got run over on the 200s in the wrong direction not too long ago, looking a little bit better out there right now. Number 8, the name that has just come alive ever since this whole AI brouhaha began. It is Alphabet, aka Google right now. The Class A share is 123 and it's about 70 right now, up about 281 right now. Listeners are 2.3%. Of course, they have an iron in the AI fire. Someone was just sending me yesterday a play that they wrote on Bard. I was like, well, there we go. That's where we are. Right. It wasn't good, listeners, but it did exist. 344,000 contracts on the tape for Alphabet Class A today. Then the Rock Lobster's other favorite, this one kind of getting the bit in their teeth as well. This is Palantir. Like they were just $7.50 not too long ago. $12.69 right now, listeners. Up another about 46 cents today, or $3.71. So apparently that's the deal. What did Uncle Mike say earlier? NVIDIA ain't afraid of the old debt ceiling. Well, I guess you just need to find your AI horse and just strap in and ride it north. And today it's Palantir as well. Number 6, another one we talked about before. We've said they should have some skin in this game. For whatever reason, they're not the first name on people's lips when they're talking about AI these days, but they're starting to get a little bit of that, the tailwind lifting them as well. This is the Amazonians trading 484,000 contracts. They're doing well on the volume front, not as much on the price action front, though, which maybe, again, is kind of going back to we were saying this is not the first name you'd think of when AI. Maybe that's why they're down a little bit today, off a little over 2, about 2.15%, trading 114.60 right now. So doing well on the volume front, not as well on the actual price action front. Another name, though, that does leap to mind for a lot of people these days, you could argue kind of got this whole AI brouhaha going recently, was Microsoft and all their unveilings with ChatGPT, getting the whole ball rolling out there. Microsoft 325.65, up nearly 12 handles, or 3 3/4. Again, sprinkle the AI pixie dust on it. 508,000 contracts. So we're over 500,000 contracts in Microsoft today. If you add up all the contracts today that are going up because of AI, we have many, many millions of contracts on that front today. Another name that you don't traditionally think about, doesn't come to the top of your mind or maybe the tip of your tongue when you're talking about AI, it's Apple. 574,000 contracts coming in at number 4 today. So another light showing for Apple out there from a volume perspective. Catching a lift today, though. So unlike Amazon, they are not turning in the wrong direction. 173.40, up about $1.60 right now. So they're kind of catching the tail end of that wave as well. But number 3, the other half of the chip zone, kind of has been eclipsed by its other chip zone friend, which is AMD, of course, out there. 1.05 million contracts for AMD today. They're trading 119 and about a third, up $11.10, or about 10.25% today. So AMD feeling its oats. My goodness, AMD and NVIDIA today, you just add them together, you got a whole market unto themselves. But you know what? It's not just all chip zone today. There is a name sneaking in between them, splitting the uprights. It is Tesla coming in at number 2, 1.27 million contracts. That's usually enough for the number 1 spot. Today, that's number 2, listeners. Tesla, 184.15, up about $1.25 today. So getting a little bit of a lift out there as well. Again, not a name that screams AI to a lot of people, but getting a lift nonetheless. And if you're talking about their autopilot, maybe you could argue they've been in that game for a while. And number 1, of course, you don't need me to tell you, listeners, but I'll do it anyway because it is my job. NVIDIA, listeners, just on a literal rocket ship to the moon right now. It's up even more since we started talking, up 82 and a third, trading 387.70 right now. That's nearly 27%. Again, that's on top of an already astronomical valuation they had coming into their earnings. From an options perspective, 2.1 million contracts on the tape, listeners. So just a banger day by just about any possible description out there. Let's see what else we got on the dock. It's kind of hard to get away from all that insanity out there in AI, but we do have some other earnings outside of NVIDIA. Obviously, NVIDIA taking up all the oxygen in the room. We also have Best Buy today, Medtronic, Dollar Tree, everyone's favorite Build-A-Bear. Yesterday we had NVIDIA, of course, after the bell, and Snowflake, and Red Robin, and Kohl's. Big Lots tomorrow after the bell. Luckily for you folks, we have a whole bunch of updated earnings move results, and earnings season reports. We'll do really quickly NVIDIA. NVIDIA was pricing in, as the Rock Lobster alluded to, he thought that straddle was attractive. And it was, obviously, in hindsight. But even going into this announcement, they were pricing in 6.6%, listeners. They delivered, as of this report, 25%. So a wee bit of outperformance, nearly 3x what we're looking at out there. 280% outperformance. So they're definitely leading our charge out there. Dollar Tree, no slouch as well. They're going in the wrong direction. Dollar Tree, they're pricing in 6.1%. They delivered nearly 14% in the wrong direction. They went into their announcement 155 in the third. They're trading 134.13, at least as of the time of this report. So they're selling off. No AI love for Dollar Tree. Snowflake, another one. They're trading 177 going into their announcement. They're popping off yesterday after the bell. They're pricing in nearly 9%. They delivered over 16%, again in the wrong direction. They're falling out of bed today as well. So again, not everything feeling its oats out there today. Let's go. All right, Best Buy today before the bell, 69.15. That's where they were going into their announcement. They're pricing in 6.7%. They delivered about almost 3%. So a little bit of underperformance out there in good old Best Buy. But hey, they've been hitting the death knell for them forever. And so far, at least, they're still going. Also had Burlington Stores. Don't call them Burlington Coat Factory. Burlington Stores before the bell today as well. 167 is where they were trading. And they're trading 167.01 right now. So a whole bunch of nothing. They're pricing at nearly 10%. So if you're looking for the premium annihilation winner of the day, that might be the one. I've got more names popping off, listeners. You can check those out for yourselves. Given NVIDIA and all this madness, our season is back up to a robust 99% right now. We were hanging out close to 90% the last time we checked in on it. So you can check out all this data for yourselves, theoptionsinsider.com. Click on the Options News and Articles tab. You can find all those reports for yourselves completely for free because we love you. As we keep on rolling, listeners, now it's time to get weird and time to get wild. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block, the portion of the show where we get weird, we get wild, we get a little whimsical out there. We unleash the Eye of Sauron, see what it fixes its fiery gaze upon today. We're going to kick things off. I do believe this is a newcomer. I don't recall talking about this one before. This is Coupang Inc., ticker symbol CPNG, trading about 15 1/3 right now, so off pretty much about 1/3 of a buck or so today. On the year, let's see, it's been an intriguing year for this name. Looks like a year ago it was trading about 13 bucks. They bottomed out in June of last year at about $10.50. Since then, it kind of rallied back up to actually hit 20 bucks. I flirted with it back in August, and it's kind of been bouncing in this pretty much mid to high teens range for pretty much the rest of the year, kind of trending back lower now, back to about 15 1/3 where we're hanging out today. But it seems like, Mr. Flowmaster, it seems like somebody maybe thinks we got a little bit of upside range due for us today because someone came in and scooped up 9,669 of the June 17s, lifting the offer for 29 cents. The stock was a little higher, so that's not working in their favor. The stock was 15.72 when that first block went up. Then they came back and did more, roughly 2x, about 18,000 total. Going up on the day. So it seems like we got a little bit of upside love. The vol, if you're wondering, listeners, was about a 46 on these bad boys. So pretty juicy out there as well. Mr. Flowmaster, I think you caught wind of these as well. What are your thoughts on all this flow, all this paper we're seeing going up in your new favorite name, Coupang?
My new favorite, yes, it's a South Korean e-retailer or something, but it was a funky trade, and it was only 10 minutes into the day when they kind of started paying 29 cents for these. But what's a little interesting, they are opening, right, and they're a couple dollars out of the money. The data shows that it's a firm buyer, not a customer buyer, but they are still sweeping them. So that kind of makes me think that they have something on the other side of this where they decided they needed some upside hedge. I have no idea what the prospects are for this company, but kind of seeing how we're seeing some double-digit movers, we're kind of back into that range where, the overall market volatility is kind of muted, right? We're hanging around, moving 1% a day, barely. But but you're getting pockets where you've got 20% movers. And so when I see something like this, I might lean into this one. I don't know when they have results, but it's enough to kind of pique my interest.
Uh-oh. The FLOWMASTER, he's on board. He might be taking a ride here in Kupang. Their next announcement is on August 9th, so I'm guessing they already had one recently, and they're going to reload again back in August. So you don't get earnings in this. Does that change your opinion at all, Mr. FLOWMASTER? No earnings in these June calls?
No, I think that I think it's worth keeping an eye on, and and some of these ADRs, these foreign companies, that's where we see some of the shenanigans. So. It might be good for a small position.
We're always on the lookout for shenanigans. Some might say the subtitle of this segment is the shenanigans block. So we'll see what shenanigans. Mr. Mr. Rock Lobster, what do you think of these shenanigans here in your new favorite name, Kupang? Are you with the FLOWMASTER? You're going to ride the Kupang call train?
Yeah, I don't think these are. I don't think these are unreasonable calls to purchase. And I mean, the stock's kind of been waving around a little bit. Vol's kind of like on the low end. No, I don't think these are unreasonable. I know nothing about the Kupang, but it sure is. It is kind of like the Price is Right style of options, and I believe at least on day one. Are they up money? I want to look here. Yeah, they're not up money on day one, which of course is not my favorite metric. They pay $29 for 20,000, and then they can buy all they want at 26 cents. So that usually does not bode well. But I think that's also a symptom of broader market malaise, right? Because if your name stock is an NVDA or Microsoft or you have the right type of semiconductor, nobody cares as long as this debt ceiling cloud hangs over everybody. So maybe that changes, and then Kupang, this Korean retailer, goes for a little ride. But I don't think it's an unreasonable call purchase on balance, but. It's like our one-day sniff test. This is not a good start to the day.
All right, we got 2 votes for liking themselves a little bit of Kupang upside. You like these listeners? You're going to jump on the old Kupang June 17 train now for even less. If you liked them at 29, you got to love them at 26. So there you go. You got a bargain deal here. Kupang calls. Let's keep on rolling. Let's go out into Uncle Mike land. Uncle Mike loves this name. He's not talking to us. Chances are he's shopping at good old Dollar Tree. Ticker symbol DLTR. Hanging out right now, 139.25. I mentioned earlier they were kind of falling out of bed as a result of some looks like not great earnings. Off $16 right now, or 10 1/3%. On the year, listeners, looks like they've had a very topsy-turvy year. In fact, a year ago, they made the exact opposite move. They rallied on their earnings. They went from 139 up to about 160. So now they've completely inverted what they did a year ago on the earnings. And they hung out there for a lot of the year. Then they sold off again to about, it looks like actually that low came about exactly a year ago, 129.25. And then it seems like they're going to threaten it again right now because they rallied it back up to 160. It is pretty funny. This chart is just bookended by the exact same move in opposite directions. So a Dollar Tree, they rallied a year ago. This year, not so much. And exact same levels, too. It's kind of eerie. But what do we notice out here? Mr. FLOWMASTER, you noticed this one, too. So maybe I'll let you take it. But it looks like it has the whiff. Are you feeling strangle on this? You feeling? I know the old FLOWMASTER machine says risk reversal. What are you feeling on this one, sir?
The machine says risk reversal. Well, it's because I have a show for Marco. It says it's a risk reversal, so I know it was a risk reversal. It looks to be like kind of somebody trying to buy a dip there. I mean, this is a defensive name, right? So, the other kind of big macro topic that nobody's talking about in the last week is recession, right? Once the rate hike cycle's done, are we going to end up in a recession? And the last things I saw said, yeah, but it's going to be mild, so don't worry about it. But, that was also a lot of concern a couple weeks ago. So, names like this do well when times are tough. And, I think somebody's just saying, what, I like it here, and they'll take the stock, and it's an August timeline, so they got some time for it to play out.
Looks like the way it lined up, and I went up late, looks like they bought, put, and sold calls as a collar. You think they did the other way?
No, they bought call. They paid 13 cents for it to buy call.
Interesting. That's why these executions are strange. So there you go, buying a little bit of a dip there. That's why we have the FLOWMASTER on the show. He can read between the lines, look at the tea leaves here. I keep calling you FLOWMASTER. Why did I do that? Mr. Rock Lobster, sir, how do you like it better? Do you like it as a collar? Do you think this thing's falling out of bed, or like it is today, or do you think this is this upside scoop here, this bullish risk reversal? You like it better that way, sir?
On this one is kind of, I'm going to say probably more. I like it more as the bullish risk reversal for the low dollars. This stock has range as high as like 150. All I know is like in the when I go visit my parents in the South, like there's Dollar Trees every, I don't know, 10 miles on the highway. There's always a Dollar Tree or something like that. So I actually I don't think this stock is a bad purchase down around the 120. So I like this better as a risk reversal, like putting it on here for a decent price. And also this is a stock that does better in recessions because, well, everything's $1. But that being said, today is just a day where it doesn't matter what your company does or it's doing any well. If it's not doing an AI something, it's going to get smoked. So, and it appears like they didn't like the earnings this morning either. So, but yeah, I like it as a risk reversal and, as a potential bounce. But that's the way I see that one. So of course, it's not trading at 200 times earnings. It's a little bit, like 20x, but I don't know. I think this stock has a good track record of going up. So yeah, I think again buying. I think it was high as 165 or something like that this year. Yeah, it traded as high as like 160 and change, and now back to 130. Yeah, I think that 25, that risk reversal is I think a decent trade for somebody that wants to be an investor.
All right, and we'll get out of here with one more, Mr. FLOWMASTER. So I know you've been busy scanning the markets. What else does the eye of the FLOWMASTER? I get a little bit of a tease. Eye of the FLOWMASTER have in store for us.
So this one came up on a scan that I have, which is stock up and vol up at the same time, right? Which, you and I know that's kind of unusual, right? Usually vol goes up when things go down. But LL Flooring, which I believe used to be called Lumber Liquidators, and the stock's up about 11%, but the vol's up 2%. And so it's a stock that's $4.30, up 12% today, 46 cents. But the calls, we got calls leading puts 4,000 to 56, and most of that in the 5-strike calls that expire next week. So there's some opening buyers in there. Could be kind of people playing around, like playing lotto ticket style. But it's pretty persistent. So, also, I actually dug back, and there was a spike of activity similar at the beginning of the year when the stock was around 7, and it did not work out. So this actually might be one to watch and kind of fade if we do get a decent bump in the vol or decent bump in the stock price. Just because it looked like it didn't work out last time.
It looks like they started scooping them at a nickel, and they're still buying them all the way up to 15 cents. So these people really have an axe to grind here in good old LL Flooring Lumber Liquidators. It sounds much more appealing of a name than LL Flooring Holdings. But c'est la vie. You're right, trading 430 right now. A year ago, a little bit loftier though, 1141. They topped out about a year ago at $12.50. So if these calls are to be believed, perhaps there is some potential upside there. Expiring next week, listeners, June 2nd, 5 calls going up for anywhere from a nickel all the way up to 15 cents. Got some regular Junes going up also as well for that, around that same time frame for 5 calls for 15 cents. So interesting. I definitely would take the monthlies over the expiring next week for 15 cents. But c'est la vie, intriguing stuff, listeners. You know what else is always intriguing, though, listeners? It's your mail and your feedback. So let's get to it. A little bit of the old mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block, the portion of the show where you folks take the reins, your questions, your comments. You also sign off on our questions of the week, and we had a pretty contentious one going up there right now. I mentioned it. It kind of went live. It was actually as a result of a suggestion of the FLOWMASTER, because he reminded us that it is the 1-year anniversary now of the listing of all things 0 day. So our world all changed collectively a year ago, listeners, when 0 day launched. So we thought we'd ask you folks. 0 day trading launched 1 year ago, at least in the SPX. Happy anniversary. Has the launch of these products changed the way you trade options? Yes, I'm short term now, so you're all about that 0 day, or no, I don't trade them. Intriguing stuff. Uncle Mike, we will start with you, sir. What is your outlook on this? Oh, before we even get there, if you have any thoughts on Dollar Tree, because I know that's your favorite name, we had what looked like maybe a strangle at first or a collar, but it looks like it went up the other way as a bullish risk reversal. So are you a fan of that one, sir? And then B, where are you and where do you think our audience has fallen on this all things 0 day poll?
I mean, I think in terms of where I'm at, it's not something that I look at, just like I had talked a little bit about on Monday, but I do think there is an effect of it. You can't ignore it. And in terms of Dollar Tree, I mean, how can you not be bullish in such a wonderful store? I mean, that's where I go to do my general shopping, but then when I want to feel high end, I'll go to Five Below.
Yes, Five Below, the premium dollar store stuff out there. Mr. Rock Lobster, same question for you, sir. What are you feeling in terms of the 0 day? Are you all about them or not? And then B, what do you think our audience is feeling, sir?
I look at them for a while, depending on my time, as you know. I think if somebody's an active trader, they're a pretty amazing tool because they move. But I think I'm going to say listeners are not really looking at them, and I could be wrong, but I'm going to say they're not really using them, mostly because it's, and I saw that paper from Ambrose, but I think it's mostly an institutional product. I mean, unless for that very rarefied group of like heavy retail traders, day traders, but I think it's an institutional product, and that's what I would say. But I've traded a couple times, but it's mostly like the 2 to 3 day range, rarely the 1 day ones.
All right, Mr. FLOWMASTER, sir, you get the last word as the resident 0 day aficionado here on the show. What are you feeling? I think I know the answer. And then B, what do you think our audience is feeling in terms of, are they all in on 0 day, or are they maybe like the crowd in front of us, a little bit reticent?
I think that they are all in on 0 day. It is the hottest topic since sliced bread, and people are using these options to express their views. You can misuse them, so you got to be careful. You got to know what you're doing. But we see a lot of broker platforms basically starting to open the products up and letting customers put their money to work. I mean, it is kind of the perfect product if you're looking for a short-term position, right? If you are worried about the debt ceiling and June 1st, which is the date that Yellen has mentioned a few times as when things might start to look bad, then you can make a trade. You don't have to wait, you can wait till that day, but you can also trade a June 1st option now. So it adds a lot of flexibility. And like I've said before, the most exciting thing to me is it's a whole new ballgame in terms of pricing and modeling. And I ran a query just this week basically looking at the straddle results if you bought a straddle every day since they were listed. And I'll put it on LinkedIn. I'll give it to you. You can post it. And it's probably not super surprising. Overall, it's actually kind of a near zero game. But there's some big trends to it. At the beginning, it was very profitable to own them. And then in the middle section, there were about 4 months where it was very profitable to be short them. And there's so much nuance to how people time their trades and what days they decide to skip. Obviously kind of some of the big economic indicator days, CPI days, people learned like, oh man, those are the days we're going to move too far. And maybe you want to flip to be a buyer on those days. So, and then the other thing we realize is there is, at least based on the history that we have, there's kind of a sweet spot with VIX between about 20 and 30. It seems to be a better sale based on the data that we're looking at. But, the greatest thing about this is we just keep slicing and dicing in different ways.
All right. Would it surprise you, sir, if I told you right now our audience is fading it? 53.7% saying, no, I don't trade them. and 46.3% saying yes. I think a lot of these guys in the pit have weighed in on our poll. So they're actually coming in on the negative, which that kind of did surprise me a little bit. Some of our pro members chiming in. We have Pariah Pants saying, I rarely trade 0-day, but I love daily expirations. Okay, so he'd probably be in the no camp. And then an Age of Delaquaria says, my opinion on 0-day options would get me banned from Twitter. So he's clearly not a fan. So they are more contentious than you might assume there. Before we get out of here, let's get another listener question in. So since I got you here live, Mr. Flowmaster, we'll get out of here on this one. This is a perfect question for you. This comes from Reigns with a Z. He or she wants to know, how does the call skew in the options market in 2023 compare to the meme stock year of 2021? So I'm kind of throwing you on the spot here under the bus a little. Well, it's actually Reigns. Don't blame me. How are we comparing skew-wise from now to back in the meme days?
So the skew is definitely steeper, meaning that those upside calls are cheaper and the downside puts are more expensive than they were during the meme stock time. We've come up, though, from that's a pretty decent step up. From the end of 2022, everybody was complaining that calls were very expensive and puts were very cheap. Complaining if you were a put seller and being actually very happy about it if you were a hedger. But a lot of the hedgers had kind of stepped back and were a little bit burned by the way that volatility had not jumped on them in 2022. So in terms of that upside skew, we're not seeing, like I said, we're seeing it in some of these single names, right? There's still little meme names out there. And this kind of NVIDIA and AI speculation will continue that for sure. But if you look at it, broadly, or you look at it in SPX or XSP, which is the mini SPX, that call skew is not super big.
All right. And before we get out of here, listeners, let's do a real quick around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block, the portion of the show where we tell you what we're keeping an eye on till our next episode, which actually won't be on Monday. It is Memorial Day weekend, so happy holidays to all you folks out there looking forward to a long holiday. So no episode on Monday, so we're looking ahead, actually, to next Thursday. We'll start with you, Mr. Uncle Mike, sir. What is on your radar until all the way into next Thursday, sir?
Debt ceiling. That's what it's about. I mean, if we do have more AI news, by all means, that something they need to look at, but the main thing's the debt ceiling right now. And I'm looking forward to where the focus gets back on the Fed. How pathetic is that?
I thought I would never hear those words, sir. You are now officially banned from the network. This horrible. Looking forward to the Fed. How dare you? How dare you say such things on my network, sir? Mr. Rock Lobster, save us, sir. What are you keeping an eye on until our show next Thursday?
Wow, this is a good one. Obviously, we got to listen. I stopped having to look at Twitter because of all the nonsensical things that these politicians are saying. I swear to gosh, as a country of 385 million people, I can't believe we have elected 580, 535 plus the president. So it's 536 knuckleheads that just can't get anything right. Anyway. Watching the debt ceiling nonsense. So actually, I'm watching what the market is doing. And I am watching the tightness in the VIX curve in the front end. So we still have that little vol bulge in the short term from the debt ceiling, and it is still there. And I am watching with bated breath to see how high a hardware company can go, like NVIDIA. And, if there's any other, what other stocks get touched by the magic wand of AI. So it's very exciting because now we have some animal spirits, like people, folks are willing to throw some money in there, and kind of waiting for the rest of the market to participate in 2023. If you look at, I think the Dow, is it even up on the air? I was trying to see, let's see, the diamonds. It's gone nowhere this year. 2023 is a bagel for the Dow, which is pretty hard to believe when the NASDAQ is up as much as it is. So it would be nice if Main Street could participate. And even with Microsoft and Apple and the DIA, it's not enough. So interesting. That's where I am. So I think there is some opportunity there, but I would not short these Qs. I would not at all because, they have gone very high before when they didn't make any money. And, and now that they're actually quite profitable companies, who the heck knows? So that's what I would say there.
Who the heck knows indeed. Mr. Flowmaster, sir, last word goes to you. What are you keeping an eye on until this time next week? And also, if folks want to check out all the, as the Lobster says, the good goodies you have cooking over there in CBOE land, where should they go? What should they do?
So you can always get us at CBOE.com/RMA, which stands for Risk and Market Analytics, which is our team. And that's where you can request a trial of Trade Alert or CBOE LiveVol, CBOE Silex, all the platforms and data services that we have. And I'm actually been digging deeper into the dynamics around pricing XSP, which is the SPX Mini 1/10 of SPX index options, which, you know, it's a product that's been around for a while. CBOE's making a bigger push to get kind of grow the awareness. For people that are used to trading SPY options, it's an index option that is awfully close to that, right? Because it's SPX divided by 10, but it's because it's cash settled and it has the 0 days, gives you a little bit more flexibility.
There you go, listeners. Check it out there. And let's go around the horn really quickly. We'll start with Uncle Mike, sir. If folks want to check out all of your own good goodies between now and our next episode on Thursday, where should they go? What should they do?
Follow me on Twitter at Mike Tosaw, TOSAW, or check out my website, stcharleswealth.com, if you're looking for a financial advisor who delves in the option product and actually looks at what goes on with the debt ceiling.
That's going to do it for us here on the show. I'll be back in a different time today, listen. I'll be back in about an hour to do TWIFO. I am down here at the CBOE. I'll have to pack up and move back to the old studio. It takes a little bit of logistics, so we'll be back a little bit later than usual for TWIFO for all you folks listening live. And then, of course, back again tomorrow, noon Central, 1 p.m. Eastern, for volatility views. We'll have our buddy, Mr. Vixologist, joining us there, Jim Carroll. And then back again after that for options oddities for all you pro folks. Then, of course, we're all off on Monday. Have a great long holiday weekend. And we'll see you back here again next Thursday, another episode of The Option Block.
The Option Block is brought to you by CBOE. When it comes to trading volatility, trust CBOE, the creator of the VIX Index, for in-depth and relevant information. CBOE's tools and services gives you up-to-date trade insights, analysis, and positions of VIX options and futures. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/VIX today to learn more. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.